Hello everyone, my name is Ovijite Modak. My student ID is 211073713. Today I will be discussing the latest monetary policy announced by Bangladesh Bank. The presentation will provide an overview of the policy's objectives, the tools used, key changes from last year, and some policies reform solutions. Let's dive right in. Setting the context. The Bangladesh Bank's latest monetary policy addresses major economic challenges, focusing on controlling inflation, ensuring sufficient liquidity, and stabilizing the national currency. These actions are critical as the nation faces rising inflation and global economic pressures. The aim is to foster an environment of stability while also supporting growth. Access key sectors. Summary of the latest monetary policy. This year policy is structured around three primary goals: controlling inflation, ensuring liquidity, and currency stabilization. Let's talk controlling inflation. The central bank has raised certain rates to control inflation, which has been rising partly due to global price fluctuation. And the second one, ensuring liquidity. Liquidity is vital for economic growth, and Bangladesh Bank has adjusted various tools to ensure that bank have enough liquidity without fueling further inflation. And the last one, currency stabilization. Global uncertainty and exchange rate reserves has made currency stability a priority. Though strategic ingenious, Bangladesh Bank aims to keep the Bangladesh Taka steering against major foreign currencies. Significant change from the last policy. This year's policy reflects significant shift compared to the last one, which was more accommodative due to post-pandemic recovery needs. However, with rising inflation, the focus has turned towards tightening. For instance, the repo rate has been increased, making borrowing more costly, which helps to controlling inflation. Open market operations have also become more frequent, allowing the central bank to absorb or inject money as needed. These changes indicate more productive approach to managing inflation and liquidity compared to previous year. Tools used by Bangladesh Bank. The Bangladesh Bank uses several key tools to control the economy. Number 1, policy rate, repo and reverse repo. Number 2, open market operations, that's known as OMOs. Number 3, cash reverse ratio, CRR. Number 4, statutory liquidity ratio. And number 5, foreign exchange inventions. And let's talk about the number 1, and it is policy rates, and which is repo rate and reverse repo rate. The reverse repo and repo rate influences how much banks can borrow from the central bank, affecting loans rates for businesses and consumers. The reverse repo rate encourages banks to hold their funds, helping control liquidity. And number 2, open market operations, OMs. Though OMs, the central bank buys or sells government securities to control liquidity. Selling securities takes money out of circulation, while buying them puts more money into the economy. And number 3, cash reserve ratio, CRR. CRR mandates banks to keep a portion of deposits with the central bank. By adjusting CRR, the central bank can control the amount banks have available to lend. And number 4, statutory liquidity ratio, which is known as SLR. Similar to CRR, SLR requires banks to maintain a certain percentage of deposits in liquid assets, providing a financial buffer. And the last option is foreign exchange inventions. Bangladesh Bank actively participates in the forex market to stabilize the Taka value against forex currencies especially vital in timing of economic velocity. Suggested policy reforms. To further improve the monetary policy framework, I would like to propose a few reforms. Number one, data transparency. Number two, digital banking and fintech support. Number three, conditional and fiscal policy. Number four, financial stability measures. Number five, targeted support for vulnerable sectors. Let's start out on number one, data transparency. Making real-time economic data more accessible can help the central bank make timely policy adjustments and boost market confidence. Number two, digital banking and fintech support. Embracing digital finance can improve financial inclusion, providing services to rural and underserved communities and stimulating growth in those areas. Number three, coordinating with financial policy. Allying with the Ministry of Finance will help ensure the monetary and fiscal policies implement each other, which is especially in addressing inflation and promoting growth. Number four, financial stability measures. Strengthening risks accumulate for banks and implementing robust crisis management protocols will ensure that the financial sectors remains resilient in certain times. Number five, targeted support for vulnerable sectors. By identifying and supporting sectors more affected by economic fluctuations such as SMEs and agriculture, the Bangladesh Bank can promote balanced growth. And finally, closing remarks. Thank you for your attention. Bangladesh Bank's latest monetary policy tackles current challenges and sets the path for sustainable growth. I hope this overview has offered clear insights into the significance for our economy. I am happy to answer any questions.